Hey y'all, Ryan here with another uncomplication. Yeah, there's some stuff that's been on my mind, so I'm just gonna dive right in. The world is a wild place, and I sense that there's a lot of questions and insecurity, and when the fear index is pinned way down low, like it is here, that's when I think my words are the most useful. At least that's kind of the feedback I've been getting, just uh, in general. When things are on their way cruising up, nobody wants to look at big picture. They just want to look at um, yeah, that future that they're trying to manifest. And when things correct or turn around, that's when there's actually like an opportunity to slip in a little bit of perspective. And I feel like that's where I'm at these days. I am not going to come and pretend that I am the best crypto trader, but I think that I have a fairly decent awareness of how the big game works. And so I want to cover a couple of things that have been on my mind lately, and hopefully it lets you breathe a little easier and helps you zoom out and yeah, see this moment in time for what it might be and not what they're telling you it is. And I think that's kind of like the basis that I want to start with. Um, and I'm going to go back a little bit. I might get in trouble here, but one of the biggest awakenings that I've ever had was in the early 2000s. I was in college when 9/11 happened, and I remember being in the dorms and watching on TV the World Trade Centers collapsing. I remember the world that immediately followed that of intense U.S. nationalism, and in a way, it really brought the U.S. together um, in a deep and powerful way, even though it was very scary and it felt like in the new century there was this looming specter of terrorism and all the questions, how could the United States be attacked, etc. And so I was very much in that paradigm, in that picture. And it wasn't until a couple years later, I think like 2003 or 2004, that I started to find online and in other places some of the what I would call conspiracy theories, and particularly around 9/11. And to this day, I remain convinced that the mainstream narrative was a cover for a lot of tricky and nefarious doings. But as a people, as a public, we are not privy to the actual agenda, the actual plan. And then again in 2020 and 2021, as the pandemic kind of fucked small businesses across the world and shut everything down and rewired our social fabric. And then we went right into the crypto bull market, which was my first time really paying attention and learning about markets at all. And that view that I had, that buying into the narrative, the Bitcoin narrative, that the fiat currencies of the world were on their way to failing, and these digital currencies were the lifeboat that was going to save us all. And the Plan Bs and the Michael Saylors and all those kind of talking heads painting this picture that I bought into. And then when I saw the manipulation and understood Wyckoff and understood market dynamics, it was again one of those paradigm shattering moments where you come to realize that when I say we, I am speaking of the general population. If you're coming to the front door to get your news, you're going to websites and news outlets, and you're conditioned to trust in a way, to believe that the story that we're hearing is the story shared by all. And I think that in this current moment, right now, we're experiencing globally a similar moment in time. One of the core concepts behind Wyckoff is this idea of a composite man. And the composite man is basically all of the players in the market, and particularly the smart money, the ones that are really moving and making the market, that they have interests that are that almost run counter to the general population. And so the moves of the market are really you can think of it as manipulation, but you can also just think of it as the mechanics that allow this same capitalist game to go on and on and on, and to keep ratcheting higher and higher and higher. And there was this cool chart that I was looking at earlier. Actually, this is not the one that I want. I think it was maybe this one. Smart money versus dumb money. And the thing that's so funny about it is that, here's through 2000 to 2024, and I haven't dug into this entirely, what this is an index of. I think it's the commitment of traders from the big operators versus the retail investors. And what do you notice about it right off the bat? Is it's completely opposite. So the dumb money confidence right now is at 0.36%, and the smart money confidence right now is at 0.8%. So almost polar opposites. And so what that tells me is that if I go across the media right now and just look at the narrative, and let's just go to let's go to the Wall Street Journal. I'm just pulling these things out of my brain. I haven't looked at these. We just have red dots. Trump threatens additional 50% tariffs on China. We got the whole trade war looming. Republicans fracture on Trump's tax bill. I mean, if I stick my finger in the air and just get a sense, it's a moment of discontent, disquiet, and fear. And it's so crazy when I actually step back and think about Trump as not just this kind of loose cannon individual that he has seemed to be, but him as a cog in a much larger working of global economic unfolding. Then I can decouple from my feelings about him, my feelings about a lot of the social impact that is happening right now, and I can start to see how the economic picture comes into play. And a few weeks ago, I saw this video. I guess it was about a month ago, maybe a little bit longer. And it's a member of Congress, David Schweizer, imploring Congress to avert financial Armageddon. And I'll put the link in the description. This was like a holy shit moment. It was one of these okay, if you really zoom out far enough and see how the United States, and by proxy all of its allies and trade partners, everyone who's bought into the current global financial regime, has been playing this game of kicking the can, refinancing, running on debt. It's funny, as just an individual, I look at my family's debt picture and just the ways that I feel about debt on the whole, and can feel kind of irresponsible sometimes, or this, that, or the other. And then you look at the national debt of the countries around the world, and it's holy shit, everyone's been playing this game. And what this video really talks to is that, because it's just been, every time it comes up for a vote, every time it comes up for rate adjustments or whatever has happened to prolong this untenable system, it's at a point now where the window is getting smaller and smaller and smaller, and to actually avoid the crisis of just the ballooning that happens when you've got high interest on trillions of dollars of debt being refinanced, and the U.S. and others making these essentially loan payments back on national debt that's all financed. that couples with another video that I saw earlier today, which was just beautiful. And I love Tino from Traders Reality. I've talked about his content. I love to see that his channel is growing and he's doing great. He's one of the smartest dudes in the space by far. And this latest video, The Shocking Truth About Trump's Trade War, I'm not going to go into all the details. You can go watch the video. I'll put the description, or I'll put the link in the description. But essentially, he just makes this beautiful argument, and backed by the charts and the data, looking at the bond yields and the interest rates and the events that are happening in the very short term, where a lot of these things get adjusted, and the window for the U.S. to refinance about $9 trillion worth of this debt is coming up. And so the actual trade wars and the tariffs and all these things that are driving the fear, driving the uncertainty, driving the markets down, actually makes the refinancing of that debt possible in a way that it wouldn't be without the driving down of the markets. And I'll put a link to that. It's really worth watching, because my whole point here is just there's the chart and there's the emotion that goes with the chart. And then there's the ability to, it's a lot easier when you're looking left and you're able to go back and be like, oh, 1980s, what was the stock market doing? How did this allow different geopolitical forces to shift and change? And it's kind of a historical study. And when it's happening in real time and there's emotion, especially if you're invested in stocks, if you're invested in crypto and these other places, and then when things flip and the narrative flips on you, it is a shaking out, it is a playing out of these wider, and I don't even want to call it manipulation, because that it almost belittles the sense to it. Because in a real way, like, to just run the rocket straight up, to run up inflation, to run up the debt balloon, that's what that other video, this one, is talking about, is that within a couple years, within a decade or less than a decade, we're already looking at the obliteration of Social Security. We're already looking at the obliteration of a lot of these social underpinnings that have been built on a foundation of sand. And so in this short-term flash crash of all of these markets, and things are getting refinanced, and the Bank of Japan is announcing its interest rates, and CPI data comes out for the US dollar, and there's so much moving at once that I guess my message is, at least how I feel about it, is it is that through the looking glass kind of moment of decoupling from the news, decoupling from the narrative, anchoring into what's actually important. This is my, if there's a drum that I've been beating on this channel since the beginning, it's the heart of what Uncomplication has always been about, which is to kind of go through the looking glass, look behind the curtain, see the game that's being played, and then find your place in it, knowing that it's a game, knowing that it's a cycle. So I guess that's my prologue, and I'll get into some specifics here, because I'm sure people are interested in just kind of predictions and things like that. And my predictions are like 50-50 at this point. I think what's more interesting to me is more, what is the sense, what is the logic, how do these patterns play out, and what is the importance of this graph of the smart money and the dumb money, and what does it mean right now when smart money confidence is at the highest it's been in 3 years, at the same time that the dumb money confidence is as low as it's been since September of 2022. How does that play out? So I'm going to dig in there. I'm going to take a little pause at this point. If you like my content, consider becoming a member of the channel through YouTube. I just set that up. I'm here. I'm doing my thing. these take me time. If you appreciate me doing them, show some support. So show some financial support, become a member, and I'll keep coming back. You can also check out my art. That's what I do. Someone made kind of a not so nice comment about my finger painting, something like that. It made me chuckle. I've actually been having a lot of success in my art career. It's been the most enjoyable thing I've ever done, including my 10 years in tech when I was running the company that I founded. So yeah, here's just a look at some of the things that I've done recently. I've done some big mural projects. I've had some really high-end pieces hanging in some really high-end spaces. I sell a lot of originals, and you can check out my website and also my free prints offer. The link is in the description. Okay, so with that out of the way, here's what I've been kind of looking at and thinking about today. One of the things I want to circle back on is in the last video, I was talking about this kind of volume mystery, which is still pretty mysterious to me. I made the mistake in that video of just picking kind of at random one of my watch list items, and I picked Binance, which a lot of people commented that Binance has some real reasons why the volume dropped as staggeringly as it did around March of 2023. But that wasn't really my point. My point is more if I go to, let's say, the BLX. So this is kind of a composite of the biggest crypto exchanges. I think there's 6 of them. I'm not entirely sure which ones they are. I was asking ChatGPT earlier which ones they were. But even on the BLX, which is a composite, the thing that's been really confusing to me is that prices have moved back into all-time high. And the volume, if you just look down here at the bottom, let's see if I can grab a little rectangle. So in 2020, 2021, all of these areas, if you look at these boxes, and so here's like the high, and we'll just take that whole last little cycle, and I'll just say, I'd say the average is about, if I'm taking some of these big outliers into account, the average here versus, with this last cycle, if we're looking about the same time period, this kind of expansion phase, we'll look over here, if I'm drawing kind of top to bottom and then filtering out some of those outliers. Come on now. Come on, you. We're looking at an average that's more like this. And that's just what I've been kind of wondering about, and some of the ETFs, might account for that there's a lot more buying over the counter. This was very much a retail-driven event, and now we're having kind of a second wave of the same types of moves, but it might be just that next echelon of investor and family funds and the types of entities that buy ETFs versus the type that go on a Coinbase and buy a crypto at a spot price. So and then the verdict's still kind of out for me. How does price move so dramatically while volumes stay low? And I guess I'm kind of just resolving to say that this was kind of this moment of really fleecing investors, I'd say, that are more retail oriented, and kind of getting them into this narrative and then turning it around on them and doing the distribution accumulation. I think this time around we're seeing the same thing, but I think we're actually going after even bigger purchase amounts, more over the counter, more ETF. So anyway, that's just kind of closing the loose end on that last video, because I didn't mean to bring up Binance, where everyone was just like, oh, well, Binance changed their rates and people aren't using it. But that's not the point. The point is, like, a lot of my hesitation and just skepticism with all of this has been that the volumes have been so low. Even these huge candles, these, if I kind of put my cursor on them, they're about halfway, maybe 2/3 of the way up, the biggest buying candles in the last cycle. So, okay, the part that I actually want to talk about that's a little bit new is, this chart here. This is the one that I was looking at in the last video and just talking about these different boxes and Elliott waves. And, someone also commented, yo, stick to Wyckoff, you don't know Elliott waves. And that's fair enough. I know enough about Elliott waves to understand the psychology behind them. And I think that when you look at market moves as large as these, it's kind of silly not to be looking at where the big psychological moves are happening, because they're not random, and they do come with when you have an expansion this big, a move to the upside that is 200% over a few months or a year, and then a pullback. You're building in the psychology of these waves that eventually lose steam. That narrative of digital gold and whatever the Michael Saylors of the world are shouting from the rooftops. That is convincing up to a point before retrace happens, and then it can kind of be rinsed and repeated. So in that last video, I was talking about where the waves might have come in, and this being kind of however you slice the onion, we're already at another psychological top, or maybe a double top like we had last time. One of the things that was kind of fun, I love TradingView because it's just such a great little tool. I know that things don't repeat exactly, but it's fun to see what what rhyme you can find. History doesn't repeat, but it rhymes. If I grab these bars from the 2020 through 2022 market cycle and just kind of bring them over and look at them in a way like this, you can already see I have this orange box that kind of represents this kind of sideways movement, this reaccumulation, or kind of building this platform for that distributive top. We had a much more extended version here, so this piece here kind of matches with that. But if I look at just this up and down motion, it's always just so funny to me how close the candles come. Even in the velocity, we've got 1, 2, 3 big up and kind of finding this range and then dropping. And so I'm not saying that we're going to have an exact repeat of the last market cycle, but the psychology that was at play there, I don't see why it wouldn't be at play here. And as we kind of find our way horizontally here in these new lows that we've just made, after what is quite obviously a distribution pattern up top here. I mean, you can see just how how almost one-to-one a lot of these wicks moved. What could we expect in terms of Bitcoin? And if you do go watch that Traders Reality video, the whole point here is that my video last time was talking about just the bare bones essentials of what do I think I know, and it started with the Dow theory of market trends, and Bitcoin and crypto being a market that has been trending up, like big uptrend, lots of movement within it, but uptrend. So there's no reason for me to think that any of this is going to zero anytime soon. And so with that frame of reference, we look at the next level of time window, and even though the sine wave of the Wyckoff swing is from overbought, oversold, fear and greed just cycling, we still might have time here. We still might have this opportunity to be buying at a discount. This is kind of at across the market right now. If I just go to NVIDIA, if I go to Meta, go to Amazon, go to Apple, even go to Tesla, which they might have dug themselves a shallow grave, in that the market that I think buys Teslas are also the ones that are most outraged at the current administration. But anyway, everything is now at a discount. And again, if we look at the smart money, dumb money, what does that tell you? Class. So one of the things that I did get from Tino's video at the very end, he makes this point of there are a lot of things that are currently priced in to the price chart. And when you look at crypto here, let's just go back to Bitcoin. We'll go to the BLX. It's kind of a safe little view. When you look at just the speed of this correction and think about, even if we do go to let's go to the Dow Jones, just the velocity with which this went down, in 2 weeks, from wick to wick in 2 weeks, we saw a correction of 15%. Or 13.66%, but still in a capitalized market as large as the Dow Jones, that's huge. But is it huge, or is it how a market moves? When I zoom out to this and we actually see where we are, we're coming back and we're testing some of these levels from March of 2022. This is, again, in that Dow theory. Just very basic, 101. Where is this an uptrend? Is this a downtrend? There's nothing really here that would incite the kind of panic that is being talked about. This looks like a corrective kind of move with, the confidence of smart money very high while everyone else is being freaked out in the news. And so what I was starting to get at is with Tino in his video, he's like, there's a lot that has been priced in already to these moves. And there's some news and events that are coming in the short time that will have more to say about, how much farther does this need to go down to kind of scrub out, rinse out, build that foundation for continued growth. I do believe that is always the goal, because that is the capitalist dystopian reality that we all live in. I saw on an Instagram post, someone said, one of the shocking things about capitalism is that it has no vision of the future. It's not about progress. It's not about personal development or, helping feed the world. There's no vision. It's purely this concept of how does this specific chart get higher? How does it get higher? And it doesn't matter who gets harmed on the downsides. That's what I really realized in the 2021 crypto, is that, the same people that will kind of present that they are your savior. They are giving you this wisdom that's going to create generational wealth, and whatever they can tell you to get you to hit that buy button. They don't give two fucks about you on the backside. In fact, they are rooting for your destruction, because it means they can come and scoop up all your loot and shove your corpse over to the side and keep building this upward trend. And I grabbed the fibs here because what's important to realize is, okay, we went up. Elliott Waves, all that stuff is built in, and then here in that COVID crash, what gets the market back up? What keeps this capitalist dream going is a crash, and that gives us the spring to get back up to the 1.618 on the fibs. And now with that move, it went up and then it came down, and that gave us the juice to get over the 1.618 from that move. And now we're moving up, and we've got, Elliott Waves built in, and now here we are at this kind of untenable top. And so what can we do but come down? If I take a fib retracement and I only go down this far, these are little tiny springs. This doesn't get us very far. You wind out that spring far enough, and you're only able to do these little moves until you come back, bring it down. Do you understand what I'm saying? If you're not used to fibs, the Fibonacci retracements and extensions here, basically this is the top, this is the bottom. The lower the bottom, the higher the fibs go in the expansion direction. So it's constantly this game of like, how far down can we whip the spring so that we can pop it back up? And so in this moment here, I've kind of got my finger on the buy button of a couple specific things, but we are also at a point where, if I look at these, let's see, BTC, BLX, wait, no, I was on this one. Yeah, so, the velocity of a crash like this, especially in the overall stock market, it's a sharp down. You can expect a sharp retracement back up. But, how long does it take to really build that structure? It's always a whipsaw of getting people who think they know what they're doing to overcommit and then get wrecked. That is the game. There are people that are smiling and laughing and making money every time that happens. So when you have a big, crash to the downside, and people are expecting, all right, well, now we're going to go back up. All these longs get put in, and then, it wipes out the longs, and everyone's like, oh, it really is breaking resistance. Now we're going to set up the shorts, and then it goes back up, and it takes out all the shorts, and then, that's what this psychological pattern is doing. And it's so funny that when you go back and look at it, it's like textbook Wyckoff, but in the moment, it's always this unpredictable kind of experience. And a viewer sent me an email that was a set of Wyckoff chart patterns. And I think there was probably like 60 of them. That's how it felt. All of these and the mirror image of them. What that kind of showed me is there are a million different plays in the quarterback's playbook. They all do the same thing, but the other team, by which I mean us, trying to predict these things and like, oh, okay, here's the worst thing to do is Ryan on Uncomplication pointed out that this, while it seems really fearful, is actually a time when the smart money is buying. So I'm going to go, double down on red. And then, holy shit, red falls through the floor. And then it's a panic sell moment or whatever, your reaction is to that. That is the game that we are on the opposite side of, because I have no doubt that this will continue to unfold in a way that feels chaotic, feels unpredictable and fearful. And then when things are at their top, at their extensions, is also when things are the most greedy. I mean, look at this. Isn't that just so funny? To get on the opposite side of this graph requires a turning off of every emotional and even in some senses logical pinning to a narrative. Decouple from the narrative. Don't worry about Bitcoin decoupling from the stock prices. That's not likely to happen. There's no evidence that Bitcoin is still kind of the last to move. It is not a safe haven. It is poker chips. It is digital poker chips. And it remains that to this day. And if I look at even this price chart right here, the BLX, now this is Coinbase. Let's go to the BLX. And this volume profile on the right side, where is the most actual interest in buying and selling? It's still down around 28,000, 16,000. You can make all the narrative you want, Michael Saylor, Plan B. But what is the value of something, especially something as ethereal as crypto? The value of something like crypto is only ever what you can get someone else to pay for it. Full stop. So, here's the real interest. Here's the real participation. And what I kind of full circled with, there's other factors involved, over the counter and exchange traded funds that are kind of driving some of this. But at the $109,000 price, here's where the interest in buying is happening. So you can believe in crypto all you want, but this is the amount of people that are actually voting with their dollars that price is going to go up from 107,000. So all of this is to say, step back, zoom out, take a deep breath, go outside, go walk your dog, pick up a hobby, and this is not financial advice, but don't, I will not, I'll talk to myself. I have stopped doing the momentary, I think I know what's up, I'm going to double down on this bet. Because even in this moment, with all that I've said, we could be dropping back down to pick up some of these vector candles, some of these big interest levels, some of these areas of liquidity. Kingfisher hasn't loaded. There's no way to predict necessarily what that Wyckoff pattern, that chart, is going to be, but we can know that there's, in this capitalist heartbeat, the goings ups and the goings downs, and the narrative is always against our logic to drive that. And one last little thing while I'm rambling, I was thinking about this the other day too. I think it's really interesting. I think culture could also be put on a price chart, because there's the idea of a pendulum swing. And I was doing some listening to podcasts and stuff recently, and I heard a lot, with this Trump administration that's coming in, and a lot of the things that I hold most value that don't feel political, and one of them is public lands, national parks, these spaces that are the last continental safe refuges for wildlife and the beauty that this continent was before the ships landed and spread the European infection to this brave new world. Those spaces, when I see the Trump administration dismantling the national parks, and I'm just like, it's only a matter of time before these billionaire motherfuckers are building their summer homes in what was formerly national parks, and building their compounds and their weird little crypto cities and all this shit. There's another video, if I can find it, I'll put it in the description, but this woman did this really great expose of these recorded lectures of all this, or speeches I should say, talks from a lot of the Silicon Valley tech billionaires that are talking about like the future being this sort of Mad Max where everyone's in their little fiefdom and they're all eyeing plots of land where they can build their own little communities that are self-sufficient and self-powered, and like that's their view of the future, is like the large population is going to collapse and decline, and they're positioning now to scoop up these plots of lands and build these little cities. Anyway, long ramble. And I sound like a paranoid schizophrenic, but really I see the cultural swings also being, in a way, the composite man. Because when the Democrats are in power, it's still like this locking down of those same resources. It is, I think, a binding up of civil liberties, even if it feels like it's not. They're the two sides of the same game. That's what I feel. And I talked about this in a couple videos ago. The Hegelian dialectic, you can go back and find that. That was right after the election. I was talking about how a two-party system really just works. It's like the fear and the greed. And if you're in one camp, it's switched where your fear and greed is, but it's the same kind of crossing back and forth that's moving this overall human happening forward, tied to these same capitalist heartbeats. And so anyway, my point is, and then I'll shut up, is just like the basic Wyckoff schematic diagram concept is a sine wave, overbought, oversold. I think culturally our moves are also a sine wave, and they're still marching in tune to the Illuminati overlords that have some destination they're trying to get us all. But my point is, even in those cultural moves, it's not just this smooth pendulum swing. This is kind of a plot of a pendulum swinging back and forth, but smoothly. I think there's herks, there's jerks. I think with something like Trump and Project 25, you've got these moments of just crazy expansion, and then resistance, resistance to that kind of oppression. And then that finds a bottom and it goes back up and then, turns around. And I think the liberals are going to have their turn once all of this insanity I mean, from my perspective, insanity, cultural insanity of like destroying all of the public programs, privatizing everything. I guess I'm getting a little more political than I wanted to. But my point is, like, these are agendas that are moving in a toothed fashion, and it's going to turn around and then put in another, bottom in the liberal direction before it turns around. And it's, it's the whole psychology that when I look at a Dow Jones stock market graph, this is really the heartbeat of this current global financial and cultural value system. And if I, put this on let's go to 6 months and go all the way back to 1896. Like, whoa, what have we done? What is this organism here? And what were the values at play that allowed it to build this kind of, in my view, fictional wealth? I guess it's not fictional if you've got the armies and the homes and the whatever, but yeah, I'm running out of steam. I'll let this one close. If you appreciate the channel, if you appreciate me coming on here, consider being a member of the YouTube channel. Make a couple bucks a month contribution. Consider checking out my art. It's nicer than finger paintings, I promise you. I'm offering free prints right now, so you can choose your favorite and I will send it to you. And yeah, I'm making my dream work, and I feel like this could be part of it. So show me some love and I'll show you the same. All right, y'all, that's it. Until next time, cheers.